down before you stress up the groove. The energy a little different when the
Good morning, everybody. You're watching SmallCapSteve Live. Gold is rocking this morning, 1866 as we speak. Silver's up above $28. Canadian dollar looks like it could hit 83 cents today. Bitcoin under 44,000, 43,161 last time I checked. Lumber, apparently we're following lumber now. Near 1,300, so looks like it's doing the full parabolic thing. See where it ultimately settles and finds support. Oh, the 10-year, 163 basis points. Copper, $4.71. So there's your Monday morning update, but that's not what we're going to talk about today. Today we're going to talk about the fireworks that went on over the weekend with Elon, Tesla, Bitcoin, Dogecoin. It's just something that I'd rather not talk about because Bitcoin people are weird, but we're going to talk about it. Have some fun. HEXO's buying 48 North. I wonder what compelled them to buy that piece of crap. We'll get into that. Pizza Hut is going to start doing some vegan pizza. Get into that maybe. I don't know how vegan it will be. Let's see. Anything else? Galaxy put out earnings. That's interesting. The parent co. buying Glasshouse. Get into that. Let's talk about today. So buckle up. Let's get started.
And it wasn't hard to climb at all. At the top I found some relief.
Jason, sweet Jason, how do you do this morning?
Oh, I'm doing great. The warm weather's finally hit Saskatchewan. It's 10 a.m. here, and it's 22 degrees as per my Alexa right next to my monitor here. So it's setting up to be a warm one, and I kind of want to get outside right after the show, if I'm being honest. How was your weekend? What'd you do?
Let's see. I woke up Saturday morning, decided that I'd troll Bitcoiners on Twitter. That was kind of fun.
That's always a fun pastime.
I was like getting ready to take a bunch of stuff to the dump, and I was like, maybe I'll have to wait and say some mean things about Bitcoin and read the nasty replies I get. Well, I waited in the line to get into the dump, which is like, I don't know, I mean, the suburbs is now we're all ordering this stuff on Amazon. This is so cardboard. I don't know if you have that problem, but I guess you live on the sticks.
Absolutely do.
You do? So that's not just me. Like it's now like at the point where we let like this giant stack of cardboard just build in our garage, and then I go to the dump occasionally, and I take the cardboard there. And that's it's weird. Like sometimes Amazon will send like this giant box, and inside it is another box. It's just like, oh, you guys could have just sent the original box. Why do I need this giant box in that's surrounding this tiny box? You know, you just created a problem for me. And, you know, quite frankly, it's probably not great for the environment to just be randomly using cardboard. I'm sure that, like, I know that new trees give off a little bit more oxygen or whatever it is. But maybe there's an argument there. I don't know. But I don't really want to go to the dump with all this cardboard. So Amazon, easy on the cardboard, okay?
Well, if it makes it feel better, I picked up some new couches this weekend. I had the same freaking problem. I wasn't expecting my brand new couches to come in cardboard, but they did, and now I have like 2 massive boxes I have to deal with on top of everything else from moving, so that's always fun. So I'll be doing the same thing this weekend that you did last weekend, if it makes you feel any better.
Yeah, it's strange. I had that issue with Wayfair a while back where they sent me the wrong right arm for my couch. So we emailed them. We said, can you guys just send us the right arm? And sure enough, they send us a whole new couch. So that couch, and I've talked about this before, but I got a couch in my living room. It's sitting there for like, I don't know, like 3 weeks. First off, they sent it to the wrong house. So one of my neighbors had to put it on a dolly and bring it over. And then it arrives, and we don't know what to do with it, right? Because like am I now going to take the right arm and put it and attach it to the couch that we already have that's missing a right arm? And now I've got a couch that's missing a right arm. And then where am I going to take that? Who's going to want a couch with a missing right arm? And then I've got this whole 85% of a Wayfair couch that I have to figure out what to do with. Right. So there's a trip to the dump. So you know what I said? I ended up saying, well, somebody's going to want this couch. It sat in my living room for 3 months. Like, I don't know how my wife didn't kill me because I didn't know what to do. Like, I'm so busy. I don't have time to fight with a couch. So my wife went on Kijiji. Somebody comes and they take it. So they ended up getting the full couch. They ended up getting a better product than I did because I didn't want to be an asshole who's giving somebody 80% of a couch. So in my basement right now, there's a couch that's missing a right arm.
Why would you do that? Someone got a free couch.
That would be a dick move. He's just gonna come and pick up
a free couch.
Nobody wants a couch that's missing a. So
well, someone was fine with taking it.
Yeah, it was gone in 2 hours. And that's a whole nother discussion too about Kijiji. I think I might have told you about my wife. Transaction on Kijiji, they have like an option where you can rate people's personalities, and she got really offended by that when she found that out. It's kind of an oddball thing that I'm sure the developers just put in there that I'm sure they get a lot of complaints about. Anyways, nobody really wants to hear me rant about cardboard boxes.
It's a slow Monday morning.
JT,
there's actually a lot out there. Where do you want to get started?
JTD, I hope you had a great weekend, my man. Big weekend for the Blue Jays. See that home run Vladdy hit yesterday? Jeez, I don't think that's landed yet. Hey-oh. All right, let's get into Bitcoin.
Don't you guys get tired of watching baseball every damn day?
No.
Like, who's got time to sit down for 3 hours every day and watch every game? Like, that's a genuine question. I don't understand.
This is what I love about baseball is it's just on in the background, dude. Like beers by the pool or the hot tub. I got a big TV. Then I open up the door so I see the TV from outside, and it's just on in the background. I just occasionally look over and I watch, a few pitches or somebody else who's watching. It's like, holy crap! See this home run, Vladdy! And then I go over and I see the home run, and then I go.
So why don't you just watch Sportsnet for the highlights then?
Because there's just something. This might sound strange.
Do you actually go to baseball games? Like, do you sit there for the full 3 hours and do like nothing for 99% of it?
Until this is the best part. You go with a couple friends. You have some beers. You have some laughs. You throw out some heckles, there's something like baseball to watching baseball to me. First off, I love the math. I love the statistics, and I can sit around and have conversations with friends all day. But it's probably more like background noise that just is part of. It's just ingrained in me. Like I'm used to just having the Jays game on in the background. So that's how I like.
Yeah, see, here in Saskatchewan, the sport's clearly hockey, and that's not how you watch a hockey game at all. So to me, it just doesn't make sense. But anyways, I've distracted the conversation now right after you did. So let's get into it. We're 10 minutes in and we haven't talked about stocks.
We got Bitcoin, Elon, Dogecoin, and energy consumption. So I'll start here. I'll start this off by saying I put out some tweets on the weekend that really angered some people. And we can see here where did I start? Here we go. Look, for people who are watching this on Twitter, they're going to see a video of us talking about what I said on Twitter. Little bit of a mind trip there. If Bitcoin were a country, it would be the 29th highest energy consumer in the world, consuming more power than Argentina, Norway, and the Philippines. A trend that will only get worse. The Trojan horse regulators will use to kill Bitcoin. Play with caution. I do feel that way. I feel that if Bitcoin continues to gain strength, it's going to pose. There's a whole bunch of like political factors at play. But that energy consumption is going to be a massive talking point amongst politicians if they have the will to try to stop it. Which I would say that if we got to the point where we started to see some central banks perhaps add it to their balance sheet, and we find out that like half of it's in China, Um, I just think that that's going to be the talking point. Is this is, it's today it's consuming that amount of power. Let's say that it grows by 30-40% for the next 5 years. Suddenly we're at a point now where it's consuming it's like a top 10 country. At what point is everyone gonna step and go, okay, a lot of this is coming from coal and stuff, probably not good. I just don't think it's a trend that's going to end well. And I'm not down on crypto. I'm not down on decentralized finance, but I think that Bitcoin has some sort of first mover disadvantages that are ultimately going to really hurt it, especially in obviously the elephant in the room is central bank digital currencies is really going to really have an impact on all of these sort of independent cryptocurrencies, if you will. But I'll continue to spec on microcap Bitcoin related plays. I think that this isn't, I don't know if this is the nail in the coffin of Bitcoin. I doubt it is. I'm sure it's going to come roaring back, probably $100,000-$200,000. I wouldn't bet against it. But I do think that there will come a point where if there's a political will to try to get in the way, this is going to be the Trojan horse that they use to go after Bitcoin.
Yeah, there's truly just so many different angles you can attack here. First, decentralized finance. Something like 65% of all Bitcoins mined in China. How decentralized is that? We were talking pre-show that I think Musk had tweeted out, if one miner goes down, they lose 35% of the hash rate. How decentralized is that really? On top of that, you've got the initial story for Bitcoin was it's a currency. That was the 2018, 2017 cycle, whatever it was. Now, this cycle, because it's gotten too expensive and it doesn't make sense because of transaction costs to use it as a currency, the story is it's a digital gold. When one guy can tweet and take this thing down by 20-25%, how strong of a digital or a hard asset is it really? Someone commented, well, how's that different from JP Morgan impacting gold? Elon Musk simply tweeted about Bitcoin versus JP Morgan, who uses millions upon millions of dollars to throw around in the gold market, silver markets, precious metals, whatever. There's a massive difference there. And even then, it's still rising despite what they try to do. On top of that, there's so many cryptocurrencies. I'm sure that every day there's more and more being created. And the pool of people that will actually invest in digital currencies is only so big. I mean, I'm not going out there and investing in them. So yeah, take what I say as bias. But every new crypto that gets added, that's less capital going into Bitcoin or Ethereum or Dogecoin or anything else, right? It's just like compared to capital markets. In Canada, we often deal with bubbles in different sectors. One of the most recent, psychedelics. The first three psychedelics companies, Numinous, Champion Brands, whatever it's called, and MindMed, last year this time, they did amazing because there's only three names. Then there was a run in late fall, early winter this year. Things went up, but then so many deals came public that there's so much capital spread around that it all just fell to shit. The exact same thing is happening with crypto. Like, we're literally watching it happen. Now you have Dogecoin, which Musk is backing after leaving Bitcoin. On top of that, all weekend I saw something about a Shibu coin or something. So that's being pumped. Ethereum's being pumped. We haven't heard anything on Litecoin. That was something from the last pump. XRP, there's just so many names and there's only so much capital to go around. The party only goes on for so long.
Yeah, it's not really that unlike microcap, and that's one of the reasons that I'm so fascinated by it. Is we're just sort of watching this sentiment-driven trade. There's like a lot of the microcap deals that we tend to watch and talk about. They don't generate cash flow, and they're not going to generate cash flow anytime soon. So there's no earnings for them to fall back on. All these cryptocurrencies are kind of the same thing. They're just sentiment-driven. Where once it's like Buffett said. Once you buy it, you've now got to find somebody to take it off you at a higher price. And then that problem of finding someone to take it off your hands at a higher price is now that person's problem. right? Now they got to worry about that. So it's not like it's generating you some sort of cash flow or some sort of return other than the speculative nature of what they're calling an asset, which like is really just sort of a sentiment driven idea that's sort of been basically turned into a stock, if you will.
The other argument you often hear is it's unregulated. Tell me why it being unregulated is a good thing. Tell me who owns all of the Dogecoin out there. There's one account that has like 25% of all Dogecoin ever created. Who is it? At some point, it's going to dump. We know that for a fact, right? In capital markets, because of regulations, you would have a sense of who owns 25% of the entire equity, right? Like this notion that there's no regulation does not mean it's a good thing. And I don't know why you have all these people saying that it's the best part of it.
And what if that is a miner in China who the Chinese government say, we're going to take all this Bitcoin from you. Thank you. And
well, exactly. It doesn't make sense to me.
Another interesting thing that a lot of people are talking about that I find kind of fascinating here, and I'm just going to pull this up here, is all the news that came out about Tether late last week, where I actually just kind of want to go through this article and slice and dice it with you. So Tether says its reserves are backed by cash to the tune of 2.9%, rather far off from the 100% it used to claim it, isn't it? But still, we now have unrivaled transparency, aka pie charts. So they're effectively telling us what they own via pie charts, which is, mostly commercial paper. We'll get into that in a minute. So remember Tether, that last time, I'm having a hard time reading today. So remember Tether, the last time we wrote about the dollar-backed stable coin around these parts was back in February, after the New York District Attorney Office decided to suspend the company and sister crypto exchange Bitfinex and fine them $18.5 million in a settlement because of their illegal activities in the state. That was, you might recall, on the basis that the companies had deceived the market by overstating their reserves and covering up approximately $850 million in losses. You might have thought all this would have some kind of negative impact on Tether, which pegged to the dollar, or even the wider crypto market, given how much crypto trading is done via Tether. But no, don't be silly. This is crypto. Since the settlement in February, when Tether was worth a piddling $35 billion, it's actually increased its circulation by more than $20 billion to about $58 billion. But what does this number actually mean? You and I were discussing this last night, Jay. Yes, it represents the total value of these tokens that are washing the cryptosphere, but what stands behind them? Tether used to claim all its tokens were backed one-to-one by US dollars held in cash reserves, but in an April 2019 affidavit, its general counsel, Stuart Hoegner, revealed that, in fact, only 74% of Tethers were backed by cash and cash equivalents, with the rest in a quote-unquote less liquid form. Under the terms of its February settlement with the NYAG, New York Attorney General Governor's Office, Tether agreed that it would provide quarterly breakdowns of the assets backing its tokens. So on Thursday, it appeared to say it had done that, as profoundly announced by Chief Technical Officer Paolo Ardonino on Twitter, though rather referring to the NYAG, he says it is the crypto community that asked for it. Okay, so we can see here's a breakdown as of March 31st, 2021. It should be noted that this is the first time since launching in 2014 that Tether has actually released any kind of a breakdown of its reserves. So that is rivaled indeed. So we can sort of see here. They break this down here for us. About 75% is cash and cash equivalents and other short-term deposits and commercial paper. 12.5% of it is secured loans. 10% of it is precious metals and corporate bonds.
Isn't that hilarious that they've used precious metals to back a cryptocurrency like this?
It's a stable coin, dude. But what I find really interesting are the secured loans. Who is that? And what are they securing against? Right? Like this is where that's the part that just high level I'd like to look into. But really, here what you have is is this cryptocurrency that's effectively operating as a bank, right? They're taking your money, which it's technically yours because you Tether, which then is supposed to be backed 1-to-1 by
cash,
and they're taking that and they're risking it in harm's way to generate some sort of return. But this is effectively a Ponzi scheme, is it not? What am I missing?
I think you're missing the part where you search through all the number of companies, and I'm sure all those secured loans are on mansions and private islands owned by the proprietors of Tether. Not making any claims, I'm just making assumptions.
Yeah, it's just that's the part that I find interesting.
Right.
In
because otherwise they'd be transparent on it.
They're smart enough that it's still mostly backed by cash, so it's like a lot has to go wrong for there to be a run on it that's going to like force it insolvent. But it's one of those kind of things. Like I don't know if you've seen the movie.
Let's face it, if there's a run on it, the secured assets just disappear.
Yeah,
right? That's just how this works.
But like, what is this stable coin? Like, why do I need to buy this thing that's backed by the U.S. dollar? It doesn't make any sense. Why don't I just buy the U.S. dollar if this is backed 1-to-1? Explain that to me.
Well, this is exactly like the whole a month ago there was a whole you can buy the Tesla crypto, which it represents Tesla stock. Why would I not just buy the stock? Like this, it opens up opportunity for people to do exactly what Tether has done. Oh yeah, well we said we'd be backed 1-to-1, but instead we had to move some stuff around to make it work. Yeah, okay, I'll just buy the stock. Oh, I can only trade for 7 hours a day rather than 24 hours. I don't care. Like it's worked for 100 years this way. Why would I change something that's not broken in that regard?
This kind of reminds me of an organization called Jews for Jesus. There's a term for that. Christians. You want US dollars? US dollars. It's a novel concept. Anyways, let's move on here. I know that there's one thing that Jay Lewis would love to get into. It is this HEXO organization, HEXO Corp, to acquire 48 North Cannabis for 17.5 cents a share.
You want to know what the funny part was on this one? Above all else, the whole price. So they said it was at 0.02 whatever shares of HEXO for every 48 North share. And they said it's at a 20% premium to the closing, or on average is a 20% premium. It was actually less than the closing price of 48 North on Friday. 48 North on Friday closed at 17.5. And the math actually worked out, so it was like 17.48. I just rounded it up to 17.5. So they're actually getting slightly less than what the closing price was on Friday. That's how bad. Like, I don't even know what HEXO's doing at this point. They're just flailing, hoping they hit something. Like, they bought New Strike Brands 2 years ago. They closed it down within 6 months. I don't know that they sold off the assets, so if they want more cultivation capacity, just open up the freaking assets that they already have. On top of that, they're buying Zenabis, which is a steaming pile of shit, despite what the bag holders want to say. They've got debt out the ass. Why you would want to involve yourself in this hot mess is beyond me. But then they go, okay, well, this isn't enough. Let's go buy 48 North as well, which has outdoor cannabis, which I believe they actually shut down some of the outdoor, or they didn't fully plant this year because the demand wasn't there for the product because it came back so terrible. And on top of that, their indoor stuff isn't all that big. So, what's the strategy here? Oh, we're buying the brand. Well, you could have just waited 6 months and both these companies probably would have gone tits up anyway. So you wouldn't even have to compete against those brands. The brands just go away. It's not like anyone's out there looking for Namaste Cannabis, which is Zenabis's brand, or whatever 48 North has. 48 North needed a $5 million loan just to meet working capital requirements. If you would have just left, these assets would have been for sale for a fraction if you really wanted them that bad. It makes no sense. Oh, there we go. I was actually slightly incorrect. The farm shut down. They don't even grow outdoor. So what the hell is HEXO even doing here? It makes no sense to buy either of these names. Like I said, both companies, they don't even have a year left in them. you're not buying anything worthwhile.
I don't. Yeah, I.
Like that's the short version of my rant.
Like, we took a swing at WeedMD and lost, and WeedMD to from what I could tell seemed to be doing everything right. Everybody talked about how great their product was. We went and saw that facility, just a gorgeous facility. They can't make money doing this. 48 North is like a poor man's version of WeedMD, and WeedMD doesn't work. So
genuinely, I want to know what's going on in the boardroom of HEXO. I think they're like literally taking darts and throwing them at a wall with a bunch of words and going, let's buy that one, and see if we can make anything out of this pile of shit. Like, there's no logic here, man.
What's the best strategy if you are a Canadian producer who's listed on the NYSE or NASDAQ? Like obviously, like if you're Sundial,
the best
your
strategy
HEXO,
it's doing what Sundial did to a certain extent. Now, I don't know why Sundial had this massive cash position of $800 million, and instead they went and bought Canadian retail. What the are they doing there? I don't get that. But I guess if you want to grow revenue somehow, I mean, they do have Canadian facilities. I can see kind of a path. But then they also invested in Indiva and Valence, so I'm not sure really what's going there. The best strategy by far, as you allude to, is just wait until a U.S. federalized or federal legal event where they can go in and just start buying up assets with all that cash they have, right? Like, the Canadian market is smaller than a single state in the U.S. California is a bigger cannabis market than Canada as a whole. So why are you trying to buy all these assets?
This is the exact reason, like early on when you looked at like Ianthus and MedMen, and it could be that Gotham Green was just a cancer that made it so that they couldn't be successful. And they just used the public markets to fund the own operations that they'd later take out. But, there's no reason that MedMen shouldn't have worked. Like if Adam Bierman could have just not been an asshole. There was, they had all the right licenses. They had the brand.
They had the brand, but they couldn't not spend money like it was an infinite thing, right? Like the amount of G&A, like they're still trying to right-size that shithole, right? But if there was ever a brand that had a chance, it was MedMen. But management just shit the bed so spectacularly that. Like I don't even know what else to say on it, right? Like I went to a MedMen store. It's great inside.
My point is that when you look at MedMen, they were early. They had all these licenses in states where there was tremendous opportunity to go and generate adjusted EBITDA and top line revenue, which investors like at this stage. I think we can agree. Curaleaf, Trulieve, Green Thumb, Air, Cresco. These are Columbia Care. I can keep going. Are all names that investors who are maybe a notch below institutional, but they're an indication that institutional investors probably will play in these names once they can in the U.S. There's real opportunity there, and MedMen had an opportunity to go and plant that footprint in all those great places where, like, we're talking about, like, oh man, if like HEXO and Sundial, they should just use their listing to just tell a great story, become a really, really expensive SPAC, and then wait to buy assets 4 years too late, right? I don't know what they can do, right? Like if I'm looking at HEXO, if I'm looking at Sundial, if I'm looking at Aurora, if I'm looking at Canopy, like what can, like where are these great cannabis markets? Point me to them. The U.S. is like, it's okay for now, like it's exciting for now, but give it 10 years, and like we'll see. You're gonna have to be able to. I actually think a name like STEM Holdings, and they are a client, so take that with a grain of salt. And I'm not saying that they're going to be successful. Like I'm not like coming out here telling anybody to buy the stock or anything, but those are the kind of names that I think are really going to be interesting in like 5-6 years when the market is fully there. And it's kind of like we're looking for like the Amazon type Uber plays that are kind of like tech related, that sort of have that network effect and that platform effect for cannabis, like a Weed Maps, who I know there's a whole like backstory of reasons to not say anything nice about Weed Maps, but this is, I suppose that the one great thing that you have, if you're Curaleaf or True Leaf or Green Thumb, etc., is that you've got the footprint to go and implement that technology that I'm talking about, because you now get to be the decision maker of what, you know, technology is going to pair with. So that's going to be a really important point at some point for these companies when they get to that stage where, you know, it's clear that just making and selling these products, there's not really much margin in. So where do you go get the margin? Right now, there's margin in time. Why do I order food on Uber Eats? I don't have to cook it. I don't have to clean it. Some guy just drops it off at my house. It saves me time. Heck, I was living in Toronto for the last 10 years. I had a car. I took Ubers all the time. Why? Because they would drop me off. They'd pick me up. I didn't have to actually go find a parking garage, walk from the parking garage to my office, just hop in the car, bing, bang, boom, saved me time. So I think that those are the kind of plays where you get to monetize saving people time and making their life easier and more convenient, where you're going to have more opportunity. That's just an example, but you know, I still don't really understand getting to the original point. If I am Sundial, or I'm HEXO, or I'm Aurora, or I'm Canopy, or I'm Tilray, what do I do? Like I can't enter the US. There aren't any good markets outside of the US. What do I do? And
you know what you do? You actually focus on properly right-sizing your operation. All these companies, they speak constantly, oh yeah, we're cutting costs, we're cutting costs. I don't care about cutting costs. I care about right-sizing the operation. Sure, it can mean the same thing in a lot of instances, but if you can't make money in Canada, why are you expanding? Expansion isn't just going to magically make you make money, right? Like, just give me a proper operator that can command, I don't care, 5% of the market, and actually just make a net income every year. And we say it can't be done. It absolutely can be done. There are private operators out there. You can't tell me that every single private operator out there is constantly sourcing funding, right? Like, it's like any industry. At some point, you either make money or you die. There's no reason you can't make money.
So you're effectively saying you become GTech. and like you may be sitting at a $2 billion valuation today. You properly right size, you close up a whole bunch of your shops, you give back, perhaps you have some cash left, you give some of it back to your shareholders as some sort of a cash dividend, and then you just run like your GTech. But remember, the board who hired you, when they hired you, they were a $1 billion company. Now you're telling them, guys, here's what I'm going to do. I'm going to scale this thing down to being a company that, like, if we really hit our stride, we're going to be a $30-40 million EBITDA company if we hit our stride. So that means we're probably going to go down to like a $200 million company.
I see what you're saying there, but I actually disagree. You can't tell me by this point in time, Aurora, Canopy, Afria, or Tilray, whatever you want to call it, they don't by now they should have the data to know what strains they should grow, what type of capacity they need. So cut down on the excess capacity because they still haven't cut down to the levels they need. Maybe allow like 5% for growth on an annual basis because things are quickly becoming a mature market here in Canada. And to do that, you go, okay, if I'm selling all this at this price, that means I have this much to spend because I want a gross profit of this. If you can't do it there, figure out what you're doing wrong so you can do it. Rather than just saying, oh yeah, we'll hit profitability in a year, in 2 years, in 2 years, in 2 years. Aurora said for the last 3-4 years that they're going to hit profitability next year. Like, they should have the data they need to know what they need to do by now. And if not, it just tells me that operationally, they don't know what they're doing.
I don't think that there is a right answer. And like I think that the right like you're probably right that the right answer is you scale it down, you run a lean, simple operation, and you hand back whatever cash you have to shareholders. And like, but you're handing a lot of cash back to people who paid, $10 a share, and it's now a $2 stock, and you're maybe giving them a 50-cent dividend. But you were dumb enough to invest at this thing at $10. I don't know what to tell you.
Market. Sorry. Yeah, tell me the path forward when something's trading at $10 and they're making $20 million a year in top line, and that $10 is based on them making 100 or more, right? Like, you're investing in a growth story that there's no actual growth there. You fail to do proper due diligence, right? Like, is that what retail wants to hear? No, but sometimes the truth hurts.
Yeah, I think that the truth is going to hurt. There's like all these conversations we're having right now in Canada, we will be having about in the US in 5 to 10
Absolutely
years.
will be. And I feel that that's what a lot of investors fail to understand. They go, well, the US market's so much bigger. Sure, but like literally the exact same thing is happening as what happened in Canada. The same thing happened in the states of Colorado, where there were so many, then there wasn't, and now it's growing again at a slower pace. But you're going to have all this infusions. Cureleaf was a perfect example. They spent $67 million to get into the state today, which doesn't make sense to me, but what do I know? Like, you've got mature markets like Oregon, sure, but what do you hear from everyone? No one's making money in Oregon. No one's making money in Colorado. So what do you think the rest of the country is going to play out to be? Right? Like, I'm skeptical that in 20 years, we're still going to look at Florida and go, oh, it's a limited license state. I just don't see that happening, despite what other people may say. Sure, states' rights and everything else, but at some point it's going to be, well, how do I get a license now 20 years down the road? It's not benefiting the consumer by any means by having those limited licenses. And a red state's going to go, okay, this isn't right? Like, it's all headed the same way. So that's why, to me, like, if you can make money in Oregon today or Colorado today, you're probably one of the better operators out there, and you're just kind of undiscovered, even if you're a private co, right?
Like, where are EBITDA margins going to sit? And this is like, I talked to an M&A consultant in cannabis a couple of years ago, and I remember him saying to me, look, when you're assessing the value of these operators, don't look at cash flow, don't look at EBITDA, look at cash flow, because with taxes, a lot of these companies don't make any money, right? And I've said the anecdote before, but I remember I used to talk with Hadley Ford quite a bit, and him once saying to me, listen, kid, there's a reason that every cannabis business in Colorado is for sale. And, it's the most mature market. It's not quite as bad as Oregon, but it's something I think about a lot. And I think, like, okay, TrueLeaf it's astounding, the margin that they generate, the EBITDA they generate. The numbers are truly unbelievable. And I don't even, like, I mean that. The numbers are unbelievable. I don't understand how they, like, generate this kind of margin with when I don't see anybody else doing anything close. So we'll see how long they can hold on to that. But I don't see I haven't seen anybody else who generates numbers like that. Like, that just is ripping out, what's it, 70% gross margins, 50% EBITDA margins. So I don't know. Like, it's
I guess the question comes down to this, Steve. How many public corn growers do you know of? How many public wheat growers, barley growers? Take your agricultural commodity pick.
Yeah.
How exciting is that? At best, they probably trade at one-time sales.
Yeah, and probably not even. Yeah, look, it's a good thing that people talked about quite a bit at the beginning, and that's what I say. It's there's ancillary services, like, for example, becoming the like a delivery company that's tech based, that makes it really easy for small time operators to integrate their products and services, effectively being the Shopify for weed stores, or the Uber Eats, or some sort of component where you save time for everybody along the network, whether it's the producer who's looking for people to sell it to, or the driver who's looking for a job where you can come pick it up and take it to the person, or the person who's just looking to save time and they don't feel like going to the store, right? Like that. Those are going to be, I keep giving that one sort of business example, but there's going to be other cases where there's going to be technologies that come out that make a whole heck of a lot of sense in the space. I don't think that grow generation is one of them, for what it's worth. I think I don't like the retail model that much. Grow generation from a valuation standpoint. I think a lot of these companies just get such rich people behind them, and the company keeps putting out good earnings, and they just keep buying the stock because they think that they're supposed to. And then at some point, they kind of look back and they're like, "Wait, what's the valuation again? How does this make any sense?"
You mean like
that's
Kronos?
sometimes, yeah, and I know that a lot of people that were behind Kronos are also behind Grow Generation too.
Yeah, they're related in some way. Anyways, let's move on. I want to address Argo N over there.
Okay, our Argo Ed says, "Listen, Jay, I feel like I'm a broken record, boy. But to the KNR, what did you think of it? Seems to me they are finally making solid progress, even with more validation." What are your thoughts, Jay?
Steve, if you could pull up I actually don't want it from our website in this instance. I want it direct from the Newswire service. They use Newswire. I'll see if I can find the link for you quickly here.
I'll have it up. I'll have it up in 1 second. Here we go.
So
CNW.
There we go. So let's run through this quick. Control Tech is pleased to provide an update on its BioCloud technology. Can you scroll down a bit there? Successful pilot with Rowing Canada Aviron. So they completed a pilot in various training facilities. Data is mirroring the independent PCR testing completed over the duration. The Middle East, it seems they've cleaned up some supply chain issues and commenced their actual pilot there. Scroll down a bit there. Canadian hospital pilot, they say sometime in the current quarter they're doing a pilot. They've got new distribution in India on a non-exclusive basis. U.S. lease financing. They announced that they're in talks to offer financing in the U.S. And I think the key of the whole thing, and there's a reason this is at the very end, monthly viral detection as a service versus CapEx. BioCloud distributors have expressed an interest in providing customers with a choice of an initial purchase versus an ongoing monthly payment. With a small initial deposit and a monthly payment of approximately $200, customers will have a flexible financing solution to add control BioCloud to their business and operations. At the end of the finance term, customers will have a nominal buyout. Steve, what does that paragraph tell you?
It tells me that they are paying customers, or they're basically giving these out for free.
What this tells me after looking at it, distributors cannot sell these things because they're too expensive, much like my theory a year ago. They want to say, hey, how about a small fee and $200 a month? Okay, but that still doesn't cover the filter, which is still going to be a large expense for them. I think they're having trouble selling them. The initial pilot program took a bit longer than you'd expect. To me, if the pilot program in the Middle East was delayed, now I don't know if it's related to Middle Eastern supply chain issues, but if you can't even get your pilot program off the ground because of supply chain issues, that does not give me confidence that I'll be able to get anything I put money down for in a timely manner. Now, the data matching PCR, that's all good by all means. I think they also mentioned at the very end there that they are changing something internally with it. If you want to pull that back up, Steve, sorry if you closed it already.
Okay, here we go.
Each data and technology advancements. Each BioCloud unit in operation logs thousands of data points daily in real time. I question that. Through this data collection and monitoring, control has been able to design advancements to the BioCloud technologies. These advancements are considered fine-tuning and adaptable without requiring hardware changes. An important advancement was achieved by fine-tuning laser optics and a new chemical bonding formulation. So, new chemical bonding formulation, but it doesn't require hardware changes. So, that doesn't give me much faith in what they had before, despite them saying how good it was. There was some stuff from McGill saying, this doesn't make sense, guys, from a reagent standpoint. I wonder if this is a result of that, where they go, okay, I guess we got to fix it because someone called us on it. I'll be honest, I didn't see the news as positive. That bit about the whole how distributors want to try and sell these things, to me, was very, very telling from a realistic standpoint of, it's too expensive. Doesn't suit a lot of applications because of that. Again, I've been a long-term non-believer in this story, so take it as you will. I'm not long or short. I hold no position in it, so I'm unbiased in that sense. I'm just skeptical that it'll work.
I don't know. So I don't know if it being too expensive it is, so much an issue. It clearly is an issue. Like if they like, so what are these things? If you just bought one outright, like $10,000.
Yeah, I think there's supposed to be something like that. So how long are these companies going to pay $200 a month for?
So
right?
like what if they were $2,000? Would they be able to move a significant amount of units?
Well, if I can buy 5 for 10 grand instead of 1, I imagine they could sell a bit more. I have a hard time believing that school systems out there are willing to go, okay, so each one is what, $10,000, and I need one in every room in this building. That's like COVID or no COVID. That's just not feasible for the small budgets that all these school systems have, the hospitals have, right? Like they're running lean as is, man.
It's
like, I worked in the HVAC. Sorry, go ahead.
I was just going to say, when you look at this management team, it's not a track record that demonstrates these guys are going to get anything to the finish line, right?
Yeah, I mean, all I'm saying is I worked with school divisions for years before doing this in terms of from an HVAC perspective, and they would have a hard time paying $5 a filter for the HVAC system that had to be changed every other month. But you're telling me that a $400 filter is going to be feasible? Again, COVID or no COVID, at some point things are just unattainable on a price basis, no matter what your intentions are.
Well, look, Saskatchewan may have a hard time now, but just call up Brent Butt, get that sweet corner gas money, and say, Brent, we need some of these control bio clouds in the school systems in Saskatchewan. Take some of that sweet cartoon royalty money, baby.
Yeah, it's like I said, and I mean, I've actually been saying this for close to a year now. I just don't see it. I mean, if they pull through, all the better. I mean, don't get me wrong. I love a Canadian success story, especially for something like this. I'm just a skeptic.
Yeah. What I thought you were getting at with that when you read that was that they're giving these away for free with this because they don't define what a small initial deposit is, and then there's going to be a $200 monthly, which, in unfortunately in our world, which is micro cap and small cap, sometimes it makes more sense to just do that, right? Demonstrate some sales, and then like, oh, the $200 pay never came. But who cares? Because you can say that you sold your first 100 units. Yeah,
I mean
that's where I thought you were going with that. But so
with like a $10,000 price point, I could be wrong on that, but just say $10,000, $200 a month. How many years is that going to take, and how many years do you think COVID's going to last? At some point, these companies are just going to go, yeah, I don't need it anymore. Come take it. I'm not paying your fee.
I think part of my problem is that some of the people who support the stock on Twitter end up hurting the image of the company because they.
Oh, I'm sure they do. Absolutely.
And I was actually thinking about that this morning. Is sometimes when you get these really aggressive people that are behind a stock, I remember once I bought a company years ago, and I told a couple of people how many shares I owned, and it wasn't a large position. There was like 10,000 shares of like a 10-cent stock or something, right? Which, for some people that's a lot of money. And a couple of I asked a couple of questions, and a couple of the promoters who were clearly posing as like regular investors on message boards were making fun of how small my position was. And I just remember thinking at the time, like, now I don't like this company. And like, your whole job is to make people like me like the company. And so I see that.
Yeah, so now instead you're a seller rather than a buyer.
Yeah,
absolutely.
And I see that in KNR where like, I can name the Twitter accounts that don't disclose that they're paid. And that like go and they're by paid. I'm talking about options. And that's fine. Like, I don't have a problem with that. That's venture capital. You got to get your word out. We accept coverage clients at the deep dive. We always disclose them on the website, right? Like I'm not mocking that, but I'm just saying sometimes like you had two credible universities questioning the technology, right? And then people were taking shots at the At these like independent like university researchers, which is like, if you're control, release the data. Go have a discourse with these skeptics and tell them why you think the technology works. Because like that's
and I mean, for the record, let's also address it was McGill University. It wasn't some like community college out in the backwoods of Saskatchewan. It was McGill University. Like,
yeah,
come on.
Yeah, I just wanted to quickly say here to Argo Ed, thank you for the honest input. I hope they could pull through. The filter costs were reduced with the last supplier. I think it was $200 and working on getting it lower. Argo, I just got to say, I appreciate the fact that you keep coming back and commenting, even though the fact Jay doesn't like your stock very much. That shows a lot about your character. A lot of people in the small cap, micro cap universe, the second that you say anything negative or skeptical about their position, they tend to like act like babies. It sounds like you're taking a very just honest look at it, and I sincerely hope for you that it works out, because I appreciate the fact that you're not getting all pissy at Jay because he doesn't really like stock that much.
Absolutely, I'm all for like genuine discourse rather than that thing sucks and I don't care about your opinion. Absolutely, if I'm wrong on points, correct me. That's a-okay. $200 is way better than $400 on the topic of filters.
We're not long or short the stock, and to be clear, I was actually, I think I might have talked to you when it was $4 or $5. I was shorting it. I was like, okay, this is like so much has to go right for this to like go any higher. That, but we never shorted it.
Never did.
There's a name that I'm actually thinking of shorting right now. That's like an 18-cent stock or something, and it's like. I don't know, man, but it's just like I read some news releases and I'm like, I don't think some things are happening there. I'm not going to mention it because it's going to come back to me. No, we don't really short stocks. I like to support them. So I don't really like shorting stocks, but every now and then I kind of the short I was talking to you about Tesla. I was thinking that
Tesla, yes, and I'll be honest. I expected more fireworks in their equity today. I'm kind of disappointed that it's only down like 2 or 3%. That's like, yeah, who cares?
Let me try to pull up the chart here for Tesla. What's Tesla doing today? Lordstown's up. They announced that they're going to do an investor day.
574 or something last I looked, and I mean I was expecting more, and I think the Bitcoiners were hoping for a lot more.
Let's take a look here quickly. I know nobody really cares about Tesla in our audience, but it feels like Tesla in some ways. So it's a 570.
That chart says everything to me. Lower high.
Yeah, it is. Bitcoin looks a lot like this too, right? Like, if I go here, let me pull up Bitcoin. Like, it's not Bitcoin's now below 43,000. Like that to me shows that like it kind of hit its resistance there.
Actually, you know what? Pull up the labs chart.
Okay.
Look at that. It's quite similar. Couldn't make the lower high or the higher high, and just shit the bed.
Look at you for remembering that one. They kept trying to come and do an interview with us. I just wasn't really all that interested in talking to them. It's like, are you guys going to come on and talk about this?
Say, oh yeah, it's going to get better, and it never does, right? Like they put out earnings this morning. Actually, that's why I thought of it. 5.5 million, down quarter over quarter. Didn't this company have like $20-30 million quarters previously? I know it's a result of biomass getting tossed around and everything else.
What's that?
Something.
I want to get that diamond guy on our show. I don't know anything about diamonds, and I've asked our producer Chris. Chris, if you're watching, which you should be because it's your job.
Big short investor Michael Burry's is it Scion or Sion asset disclosed today it bought Tesla puts in Q1 worth a total of $534 million, approximately 33% of its entire portfolio, according to a 13F SEC filing.
Wow.
Holy man!
And
roughly 800,000 puts.
Look,
it came to me via private chat, so I'm not going to share the screen. But holy man!
And I was talking last week that I was I talked to you about it. I said, is now the time? Because I've always like thought that there would come a point in time, because like Tesla's valuation makes no sense. Let's agree on that. This thing should be trading. I mean, I think that if it's trading around 50 to 100 billion, that's probably like fair, given like the challenges ahead of them.
Yeah, you know what? I could easily justify that. 500.
It's got a long way to drop, right?
It's got a long. It's to me, like, realistically, it's worth 20% of what it's currently trading at.
And I'm curious, just because Michael Berry's known for almost being like, he was previously a doctor, and like it seems like he's very methodical about how he thinks things through.
What's with so many of these different doctors and that coming into the stock market? Maybe it's just lately, but like it just seems like so many of them actually turn out to be great financial guys.
Yeah, I don't know. Very quickly here, guys, let's cover a couple of other stories here that I said that we'd cover. AT&T announces deal to merge with Warner Media Discovery. AT&T said it would receive an aggregate amount of $43 billion in combination of cash and Warner Media's retention of certain debt. So that's going to be the Discovery Channel, TLC. They're going to be merging with Warner Media, which is like, I think TBS, TNT.
That should be good for the U.S. media landscape.
Yeah. What else did I want to cover here? JP Morgan's going to reopen their offices across the U.S. as pressure grows on their rivals. They're going to reopen their office. They've already reopened their offices across the U.S., including Ohio, Texas, and Arizona. It's all part of the firm's plan to call back its entire U.S. workforce, at least on rotation, in early July. Here's a story that I did want to spend a quick minute on, just because, like, I think that this is a very interesting thing here, something that is an opportunity for vegan foodpreneurs. I may have just made up that word. Pizza Hut Canada partners with Beyond Meat to launch the Hut's first ever plant-based protein Beyond Italian sausage. So is
Alberta, like the ranch capital of Canada, really the best place to try a vegan pizza?
Hey, look at this! I'm now getting mortgage ads. I'm not getting my yoga pants.
You know why? I looked at your calendar. That's why. But I will give you $2 if you can pronounce that last name.
I forget that you have access to my calendar. My wife's making us meet with a mortgage broker. I'm happy. I
saw. I was like, "Ooh, Steve's gonna want to cash out."
I'm totally happy renting a house in Ajax. We got an above ground pool. My buddy Kyle came by on the weekend, and I asked him. I go, "How much would you pay to see me Kevin James grown up to this pool?"
Right off the roof, please.
Have you seen Grown Ups 2 where Kevin James?
Oh, of course.
Who's obviously a bigger guy.
Sandler's classic.
Kyle goes to me, I would pay everything I've got. And I'm nervous. I'm going to be getting out of the pool one day because I'm so heavy. And I'm going to smash the walls and it's just going to come flying out. My kids are going to be surfing down the street. Anyways, I look, the big challenge to me with vegan pizza is going to be the cheese. I think that like that's a tremendous opportunity in terms of the food space. Someone's going to come along with a plant-based pizza program that's going to do quite well, and they're going to have to find the appropriate cheese to do so. I say this. Alexander Hutchison said plant-based protein at fast food restaurants has no legs. That's a good point.
You know what? I disagree, Alexander. You know why? Because right now everything is plant-based. The cow goes out, eats the grass, and then he makes the milk. What do you make from the milk?
Well, I've had the Impossible Whopper, which is actually, as far as I know, is pretty good. Because the Whopper, and look, I could talk about fast food all day long. The Whopper is like a really like high surface area, but low volume patty. And you got that iceberg lettuce, the big tomatoes, the big bun, the pickles, and it kind of feels like you're eating actual Whopper, right? But I gotta say, I go to Burger King. I know the cow died to make me that delicious Whopper. I'm still getting that Whopper. it's an interesting point that it doesn't really have a whole lot of legs. But I'll tell you this much: the capital markets, the investment community does like vegan deals. If the share structure is right and the people behind it right, looking at you, Sean Dollinger, then, which was sarcasm, you can make these things dance and you can make these things work. Else Nutrition, and what's the other one that's just the Good Butcher, Very Good Food Company? Are they called?
Very Good Food Company, yeah.
Yeah, like that.
Else Nutrition, it's not really applicable. It's like a toddler food company that has vegan.
It's a vegan baby formula that generates like no revenue and has like a $300 million market cap. Stock trades tremendous volume. The company's raised tremendous amounts of money, demonstrating to me that there is interest in this. JTD says Steve's passions are fast food and yoga pants. Yeah, that probably sums me up well. So again, I don't know that it really matters if you're going to have Beyond Meat, if you're not going to be doing full vegan pizzas. And from reading this, skimming it, I don't see anything here showing me that they have
Beyond Creamy Alfredo. That just sounds disgusting.
Yeah, and vegans are really weird about cheese. Like, they you know what
the biggest turnoff for me was? The whole vegan movement. I was watching, I was like, okay, I don't want just salad all the time, but I mean, I'll look into how they cook for vegan, because it was a bit of a pump market for a few months there. And everything I watched is they're literally just going and getting what they call char on their lettuce or everything to get some different texture and everything. I'm like, when I char a burger, I'm pissed. I don't want it charred. I just want it cooked properly. But instead, they're going after this grossness so that they can have some different texture and taste to their food. I'm like, that there tells me that it's just not that good eating.
Yeah,
right?
Well, we'll see. I'm telling you, from a capital market standpoint, there's tremendous interest, and the vegan food space is a category that is growing. But we'll see where it goes. We'll see. This is probably something that we hear about in the news. It's a little gimmicky. Who knows if Pizza Hut will have that? There is actually a trend online called "Why did Pizza Hut taste better in the '80s?" And just having seen that, it did get me thinking. Like when I was a kid, Pizza Hut did taste differently, and it was like it tasted a little bit like beer.
That's funny.
Anyways,
yeah. I mean, as a kid, it tasted better, but I think that's just because greasy pizza was a rarity rather than it can be the norm if you really want now.
Let's wrap it up here. What's going on this afternoon at the Dive?
This afternoon at the Dive, we have good friend and financial consultant Michael Miller on the on the Daily Dive, who goes through diligencing U.S. cannabis operators. He goes through one of the methods he uses, which most people don't actually bother to do, and it actually has great data. On top of that, we have some stuff on the Canadian real estate sector coming out this afternoon. Earnings reviews from Justin on some of the larger cap stuff that he covered. And I think more consensus estimates. This evening, TPCO Holdings reports their earnings, if I'm not mistaken, for the first quarter. And later this week, there's a couple more cannabis companies reporting as well. So stay tuned.
Whew, look, guys, nothing we talk about on the show is a buy or sell recommendation. We're not licensed. You're looking for that sort of thing, go find somebody who's licensed. This is for entertainment, informational purposes only. And look, we're doing it to the best of our knowledge, at the top of our heads. Don't sue us if you buy anything or sell anything we talk about. It's just for entertainment purposes only. Look, guys, you can spend your last hour sitting at any screen, any place in the world. You chose to spend it with us. If you're watching us on YouTube, would appreciate it if you hit the subscribe and like button. Facebook, give us a follow. Like our page, Twitch, whatever it's called. I appreciate all of you taking the time to join us. See you tomorrow. Enjoy the rest of your training day, folks.
Finally got some, please carry on, but please don't mess up the mood. Yeah.